Hey everyone, welcome back to Yuri's Box. In this video I'll be talking about is the US economy in stagflation. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So hopefully this will be a shorter video. I know every time I say it's going to be a shorter video, it ends up being the same old 20 minute meatloaf. Regardless, we had some data come out today, discussed it in the video I made earlier, that suggested potentially that, we have lower growth and then we have, prices spiking up in the first quarter. That's kind of giving off a stagflationary vibe, right? Nothing too, nothing to be optimistic about. All right, that's basically the bottom line. I challenged that view earlier today, and I thought it might be actually appropriate to make a small, really in-depth video about whether or not the US is headed for stagflation. And whenever discussing things like stagflation, well, the first thing you can look at is the stag, all right, meaning growth. And on that side of the equation, we had ADP come out today at 62K, compared to the 147K the previous read, and well below the 115K, which was the consensus. So, stag, so far, so good. GDP growth came in below expectations, actually at negative 0.3 compared to positive 0.3, which was the consensus view. So again, as far as the stag is concerned, we're getting there. On the inflation side of the story, we had again, some of this data, the GDP price index, the core PCE prices for the first quarter came in hotter. But usually, another way you can look at things is actually what the commodity market is saying. And again, commodities tend to be quite volatile. But if you're expecting really some kind of, some structure, if you'd like to see some structure in the inflationary side of the story, the first place to look at is usually commodities. And I think the best place to start is oil. Because, again, when thinking about stagflation, the first thing that comes to mind is usually actually the 1970s, all right? Whenever we've had, say, headline inflation tick up, you've seen the chart many times if you've been on X, we go down, then you go up here, and then you get, whoever overlaying the 1970 chart of inflation where it bottoms out, then and then it goes back up. And every time, we get an uptick on inflation, it's the 1970s all over again. But actually, what happened in the 1970s and what really caused the stagflation of the 1970s? Well, basically this, what you have in front of your eyes right here. And this is the price of oil. So again, oil really started spiking up in the first years of the 1970s. And, not to be too pedantic, but the reason why we actually had this huge spike in oil wasn't really anything related to, you can argue that, this was the years of Arthur Burns and, raising rates and lowering rates. And yes, money supply, all that, absolutely. However, what caused this move up, the big part of the stagflationary 70s was actually an oil embargo. These were the years where you had the, if I'm not mistaken, Yom Kippur. I might be saying, I might be completely off track here, but, basically Israel versus, all the Arab countries during the 1970s. US backs Israel as, a tit for tat. Huge tit for tat, really. Arab countries declare an oil embargo, which sends oil from, well, let's just say right here, 3.345 up to, that's the top right here, to about $39.50, which is a nifty 1,000% increase. All right. And so again, oil stayed at these elevated levels. And I mean, you look at $31, for a barrel of oil, and you think, sign me up, man. Right? But consider that oil was at $3 a barrel. Just 13 years ago, before basically the secondary top here at $31. So that is what mainly drove the stagflation in the 1970s. So if you hear stagflation today, probably the best place to look, to get a clue, would be to actually look at oil. And what is oil doing today? Well, as if you already caught a sneak peek of it, nothing too hot. All right, we're down 3.3% approximately for the day, and we are in the 50s. We are well below the highs. All right, compared to last year. Now let's say it's 29th of April. Let's go back to 29th of April right here. We were at $84. So we're basically it's $26. $26. Nice check out on my maths. We're $26 lower actually on oil compared to last year. Out of curiosity, I'm doing this on the fly really, but no, we were more or less the same. Yeah, a little bit lower than the year before. And again, just for perspective, we're definitely well below the highs of the 2022 highs, really, when we were hovering around the hundreds. So again, this really doesn't scream, stagflationary shock. All right, oil typically responds to, supply and demand, really. If you have supply headlines like, say OPEC announces, they're going to drill, that'll negatively impact price. If they say they're going to hold back on production, that will be a tailwind from price, of course. Again, there's less supply, higher price. But it also moves according to demand. And if, say, growth is kind of lacking, well, you'd expect that to see in oil, which is precisely what we've been seeing for the most part ever since, just prior to the Trump inauguration. But again, from April 2nd, oil has been saying one clear thing: growth isn't there. Right, and I'm being dramatic because that is exactly what oil is saying. Now, that necessarily isn't my position. If you've been following the channel, you know that I'm in the slowdown camp. I don't think we're in a depression. I don't think we're in a recession just yet. We might be headed there, but that's a developing story. Just looking at oil, this doesn't scream stagflation like the 70s. All right, so this is one of the first places you could look. And other places like the metals. All right, silver is down 1% today. Silver is an industrial metal, so a lot of people like to be. Silver likes to piggyback off of gold, and but again, it's because of its industrial application. Again, what is silver telling you? I'd argue more of the same as what oil is telling us. Finally, another good place to look is copper. All right, ever since really, let me see, the Trump inauguration is right here. Yes, we did have a few, copper going up. Really, kind of hard to argue against that. But in reality, again, after inauguration day, Liberation Day, really, I'm getting confused with all these days here. Copper has been saying giving us quite a consistent message, and today as well, copper is down 5.3%. Now, again, metals tend to be quite volatile. Again, if you have supply shocks, anything related to supply, that can impact price. And we've seen copper have quite volatile sessions. If you look at on the weekly, especially, that jumps out quite clearly. Again, you have these huge moves up and down, up and down, up and down. It's just that's kind of the nature of industrial metals. But regardless, what's the point of this video? I mean, I'm typically, if you've been following my previous videos, you'll know that I'm more worried about growth. And any bout in inflation is just likely going to hurt the demand story even more, simply because demand, as of right now, meaning consumer demand, isn't really that strong. And I've made the case many times in my previous videos. And again, when looking at things that make the economy, so copper, silver to a certain extent, and particularly oil, it's hard to make the case that they are screaming 1970s. I'll leave it at that. If you like this kind of content, consider leaving a like and subscribing to the channel, and I'll see you next time. Bye.